All right, you beautiful humans. I actually want to follow up with you on a recent video that I did about renting versus buying and look at it through the lens of whether you can still build wealth as a renter, especially as rent prices are expected to continue to rise, and even provide you with a different perspective that you may not have even been thinking about, but you may want to consider it. Now, what we're going to do is compare what happens when you rent for 30 years versus buying, let's say, a $500,000 home at a 7% interest rate. We'll talk about that real data, we'll talk about investing habits, and a breakdown of what most people forget, which is the hidden cost of home ownership. So a good place to start here is with that $500,000 home. And let's actually talk about, like, as we start, not everybody has that 20% down payment for a $500,000 home, but there are mortgage situations like where you can put 5 or 10% down. So let's just talk about 10%. So 10% would be $50,000 and a 7% mortgage, which would mean that loan is $450,000. Your monthly mortgage is $2,990, but let's add in those property taxes at about 1.25, so $521 a month. And then, of course, yes, maintenance and insurance, which is approximately $300 a month. And that is a total cost of $3,800 per month. And of course, after 30 years, here's the thing, the mortgage is paid off. And if that home appreciates 3% annually, it's worth about $1.2 million. But here's the thing. The interest, and I talked about this before, when you first start paying on that mortgage, the majority of your payment is going to interest, and it will continue for all those years. So $627,000 will go to that mortgage interest, and then $186,000 to property taxes based on those calculations, and then $100,000 on maintenance and insurance. And honestly, folks, like, those could increase. Like, the maintenance could increase, the property taxes could increase, but for right now, we're looking at about over $900,000 in non-equity costs. So while your net worth rises, your actual profit from owning the home is much lower than the raw equity numbers suggest. And I did want to keep the mortgage at 7%, but yeah, I get it. You can refinance or get a lower rate, but let's say that we end up seeing 4 to 5% interest rates again. And yes, that could reduce that total paid on interest. Of course it can, but would these lower rates cause further housing inflation if this impacts inventory with more buyers and, fewer homes on the market, and potentially driving up total property taxes that are paid due to higher assessments and valuations? But we could actually get into the weeds on this a little bit here, and I know that this is a little bit more nuanced, but we're just kind of sticking with this for right now. Now, of course, renting the same home, let's say that rent starts at around $2,500 a month. However, it's going to rise as we see, let's say 3 to 3.5% yearly. We'll say 3.5%. So in year 10, that same rent is going to be $3,500 a month. And then year 20, it's going to be $5,000 a month. I know we're starting to creep up there, but by year 30, I know this sounds ridiculous, but we're looking at approximately $7,000 a month. I know, sounds ridiculous, but that's where we could end up. But here's the thing. If you had that $50,000 down payment, if you were someone you were thinking like, oh, we have this down payment, maybe it was gifted to you, maybe you were really good with saving, maybe you've combined, your resources, like with a partner, whatever it is. Let's say that instead of putting that $50,000 into the house, the numbers could look very different for you. So let me actually give you a couple of scenarios to explain. So let's say that we have renter number one, very disciplined. So they start with that $50,000 and put that into some type of investment vehicle. What they'll do is then continue to invest $405 a month for 30 years at a very conservative 7% return, with a final value of approximately $900,000 to about $1.2 million in that portfolio. And that's honestly a decent chunk of change. But let's say that we have renter number two. Now, this might be a little bit more disciplined, but then realistic, where let's say that they are real gung-ho and they invest $800 a month early on. But as rent rises, the investments start to shrink. So maybe they're only doing like $800 for the first year, and then that just kind of starts whittling down. And then we're really looking at around $600,000 to $700,000 in that portfolio with that same 7% return. And I understand that you can invest more aggressively or have a better return, but again, just for the sake of this video. So let's say that the homeowner has then spent that $50,000 on that down payment. They don't really have much in savings left, so they're just going to go ahead and start with $0. Now, because the mortgage is higher than that initial renter's rent at $2,500 a month, they're going to say, okay, we're going to start investing $250 a month, but we're going to increase it 3% year over year with a final value of around $417,000 in investments. And I know that doesn't sound like a lot. And again, you can scale that up, but they also have that $1 million in home equity. But we got a couple of takeaways here before I throw something else out there. So buying does build equity, but it costs you. It costs you in interest, costs you in taxes and repairs, and that can eat over $700,000, maybe even more of your home's value. So renting does offer some flexibility. And if you're disciplined, you can actually build comparable wealth by investing consistently. And like I said, in some cases, maybe even aggressively. But here's the truth. If you rent and don't invest, you lose. And if you buy and never invest, you also lose. Now, wealth isn't always about where you live, although sometimes being in closer proximity to certain opportunities could be an advantage, and I will actually talk about that. But regardless, it is about what you do with your money. Now, let's look at something that you may not have been considering regarding your career and your flexibility. So renters do have the ability to move for better jobs, better cities, or especially that income growth. And that mobility can fuel upward career momentum, but higher paying areas often mean higher rent too. But that mobility is an advantage, but only if you use it wisely. Now, a personal situation for us. Now, my wife and I had decided earlier in our careers, not like at the beginning, but definitely at a stage of our careers where we were living somewhere else and we were in a very heated market that we could unload our home very quickly and move to an area that, again, we felt like we could build our network rapidly and actually income rapidly. But we did make a longer term play here that did pay off. And again, this is our situation. We felt like this actually provided an extra $1 million collectively over the following several years after we had moved. And this was just based on getting access to a certain network, a certain access to certain industries, and just kind of a financial environment that really did, not only it protected us, especially during the Great Recession, but it also allowed us a lot of upward momentum. And it only really took us just a handful of years to get to that point, and it has continued to pay off for us. But that's the thing, you have to look at your own situation, because I understand that, emotions are involved, family could be involved, and it was tough, but it paid off for us, and it could pay off for you. But don't let anyone shame you into buying or guilt you into renting. You got to run your own numbers. You got to understand your long-term goals and make sure that whether you rent or you buy, you're investing either way. You're not throwing money away by renting, but you are throwing money away by not investing. Here's the thing. I would love to know where you are in this journey right now. I would love for you to hit me up in the comment section below. I love having conversations with the community. And honestly, if you like this video, please hit that like button, please subscribe, and share it with someone who may benefit from it. I always want you to stay informed and stay empowered on your next level up, and I will catch you right back here on the next one.